Hello and a warm welcome to Inside India. I'm Manisha Tank. These are your headlines this hour. Techs are getting a boost after OpenAI inks yet another blockbuster deal, this time with AMD, in a sign of no let-up in the AI boom.
Every gigawatt of compute is significant double-digit billions of revenue to us.
We need as much computing power as we can possibly get. And I think the whole industry right now is trying to really adapt to the amount of demand for AI services that we see coming over the next couple of years.
In India, the Nifty finally reclaims the key 25,000 level as investors eye a flurry of high-profile IPOs. LG Electronics India, that listing drawing anchor investors from Norway and Singapore and the US, while eyewear retailer Lenskart gets the regulatory nod to go public. And India eyes a free trade deal with Qatar in the coming year as it looks to double bilateral trade with the Gulf nation by the end of the decade. Yep, it's go, go, go so far this session. Let's get a look at the Asian markets as we open the show. Some markets offline today. That includes South Korea, China, and Hong Kong. Ongoing festivities there, but otherwise Taiwan's TAIEX index hit a record high as chip stocks rallied on the back of the OpenAI AM deal that was announced overnight. The Nikkei has broken through fresh record highs for a second straight session. This follows Monday's record high. Sanae Takaichi, already being branded Japan's Iron Lady, had won the race to lead Japan's LDP. That was over the weekend on Saturday. She is set to become the country's next leader. It is affecting bond markets. We'll check in on those later, but the Japanese yen, I can tell you, did weaken about 0.1% against the greenback as investors continue to digest the impact of her potential leadership. In Australia, the All Ords, meanwhile, extending their losses from a previous session. The Indian markets, they're coming online in about 45 minutes, and it's definitely a big week for India. In terms of the futures, we are indicating for a higher open, but it's pretty muted. This after the Nifty actually crossed the 25,000 mark that happened in the previous session. The market sentiment there still constructive. It is the second quarter results season. We've got banking stocks, IT, capital goods, consumption, all very much in focus. So lots to digest there. On to some other news. President Trump is saying medium and large truck imports to the United States will face a 25% tariff that'll start on November 1st instead of October 1st. And this is on national security grounds. Mexico, Canada, Japan, Germany, and Finland are all top exporters of heavy trucks to the United States. The U.S. Chamber of Commerce had urged the Commerce Department against imposing the higher levies. Let's stay with the subject of trade. Pakistan has dispatched its first shipment of rare earth minerals to the U.S. The shipment comes after a deal signed last month between U.S. Strategic Metals and Pakistan's Frontier Works organization, jointly investing $500 million into building up Pakistan's mining and processing facilities. The U.S. is also reportedly in the midst of discussions with Turkey for a rare earths partnership, as the Trump administration looks to reduce its dependence on China for rare earths. It's worth noting that China monopolizes the market both for mining and refining these critical minerals, and countries have accused Beijing of using that advantage as leverage in trade talks. Meantime, India's Commerce Minister Piyush Goyal is in Qatar to finalize a much-anticipated free trade agreement. He's hinted that the deal may be done by the third quarter of next year. CNBC's TV18's Parikshit Luthra has the latest from Doha.
Commerce Minister Piyush Goyal is here in Qatar for trade talks. He held meetings with his counterpart, Sheikh Faisal bin Thani, here in Doha. This was part of the Joint Commission on Commerce and Trade. There was a 36-member business delegation accompanying Commerce Minister Piyush Goyal. The focus was on concluding a bilateral investment treaty, finalizing the terms of reference for the trade deal as soon as possible. And the minister said here at an event that India and Qatar could possibly conclude an FTA by the third quarter of next year or even earlier. This could be a positive for sectors such as pharmaceuticals, for agricultural products and companies, for gems and jewelry, cosmetics, for mineral fuels, for those making copper articles as well and engineering goods. Having said that, India is also seeking greater investments from Qatar into India, especially in sectors such as real estate, data centers, artificial intelligence, infrastructure for that matter. The minister also formally launched the UPI, or India's payment system, the Unified Payment Interface, here at the Lulu Mall in Qatar. And the minister said that bringing the UPI to Qatar only showcases how there will be greater flow of capital between India and Qatar in the years to come. So let's see how the FTA negotiations go. But overall, both sides are confident that there is political consensus between the leaders of India and Qatar, and therefore finalizing an FTA may not be difficult.
Parikshit Luthra there in Doha. Meanwhile, India and the European Union have entered the 14th round of negotiations in Brussels. Yes, you heard that right, 14. And this is to establish a free trade agreement by the end of the year. Commerce Minister Goyal said he's confident the two sides will be able to resolve outstanding issues. So what are they? Some of the key sticking points have been agriculture and generic pharma, while New Delhi's trade ties with Moscow could also be challenging for the bloc as it tries to confront Russia over Ukraine. Well, Nikita Singla is a non-resident South Asia scholar at Carnegie Endowment for International Peace and joins us now. We can sort of chat over some of these issues. Let's start with these talks with Qatar. Piyush Goyal has said bilateral trade between India and Qatar can double in the next 5 years, Nikita. Is that possible? It seems like such an ambitious target.
Thank you, Manisha, first of all, for having me on the show. You know, trade between India and Qatar has heavily been in favor of Qatar, actually, because, you know, all the petroleum, crude and gas products that we import from Qatar make up almost 90% of India's total imports. So I think the whole idea of this proposed free trade agreement is that India wants to diversify its trade with Qatar. And, you know, the whole idea is to also secure alternate export markets and cushion our exporters from rising tariff pressures in the US. So the idea is just not doubling the trade, but also actually having alternative export markets given the geopolitical pressure. So I think the focus will be beyond trade. It will be on investment. It will be on strategic cooperation. We saw how Minister Piyush Goyal also held the first India-Qatar Joint Business Council meeting. So, you know, all in all, the focus is how do we actually expand that arrangement between the two countries. And I think this comes at an interesting time because geopolitically, US President's decision has extended an unprecedented security guarantee to Qatar. So Doha is really positioning itself as a critical mediator, if I can say, in regional conflicts. You know, we saw that recently with Hamas leadership over there. So one part is the geopolitical part. The second is actually the expansion of the trade. And the third is, you know, as trade builds up between India and Qatar, higher trade volumes will also create demand for more efficient transportation, more efficient logistics. And this would ideally leverage the India-Middle East-Europe economic corridor that has been so much in conversation. So, you know, a streamlined FTA is not just about doubling trade volumes. It also includes provisions for streamlined customs, let's say, rules of origin, regulatory standards, and all of this directly aligns with IMEC's goal of reducing transaction cost.
Yeah, I mean, this is one of the reasons why I wonder whether this is particularly ambitious, because there is just so much that can go into this. And you mentioned the geopolitical concerns. We'll get to that just ahead. In the meantime, you know, we were just displaying a graphic then where we were looking at how major that imbalance is between India and Qatar. It's a $10 billion trade deficit that the country's running with Qatar. So can an FTA actually help rebalance a relationship like that when you take into consideration all of the different factors that you were just mentioning?
So, Manisha, an FTA will not balance this overnight. I think this is like a step in the right direction, because the whole idea of a trade agreement is how do you balance more trade? You know, that's the whole idea. So slowly and gradually, we will diversify more exports into the Qatari market. But that is it. It's not going to change overnight. I think we must be cognizant of this fact, especially given our energy imports from there.
Yeah, look, I'm glad that you raised this issue about energy imports. Does an FTA actually give India more energy security? Is that going to be a factor in these talks? I think this is obviously an issue that all countries are having to embrace right now. Everybody wants to ramp up on AI. It's been the big talking point for the markets today with this huge deal in the United States. But at the end of the day, if you want data centers, if you want progress, if you want to run what the finance minister was talking about over the weekend, which is an 8% growth rate every year within the next 10 years, you need energy to do it. Do agreements like this help?
So again, I think geopolitically, what's happening between India and Russia, and with the whole U.S., rising tensions, the idea is that we diversify our energy sources as well, and we have seen that within India, not just in the outside markets, how around the Andaman Sea, India is actually exploring its energy reserves. So that holds true. We want to continue trading with Russia, but it's also worthwhile to look at other markets, including the Qatar. And also a free trade agreement potentially with the US will also look at, some potential energy imports from the US. So I think this whole package is a diversification package.
Nikita, I'm really curious. When it comes to the Middle East, the timing is interesting. So let's sort of put in the focus Pakistan and some of the agreements that Pakistan is making with other regional players in the Middle East at the moment. Is it a bit of a push factor? Is the US, obviously, the Trump administration's position on tariffs and trade, are these feeding into the timing around this? And there's sort of some suggestion that perhaps India is playing catch up when it comes to strengthening these trade ties with the region.
So, Manisha, I would beg to disagree on that. I know you're referring to the Pakistan-Saudi pact recently signed, but I think India for long has had a look west policy and has very strong relationship with the Gulf countries. We have always had very strong trade relationship with the Gulf countries, including Saudi Arabia. When the security pact with Pakistan was signed, we looked at the numbers, how much Saudi Arabia trades with Pakistan and how Saudi Arabia trades with India. So I think India is not playing catch up. India has for long played this, an evolving leadership role in the region. But I would agree that the rising US tensions are pushing for early conclusion of some of these agreements.
Yeah, it's a very interesting sort of new strengthening of relationships. And, it's all about trade ties with regional friends. This is something that comes, and it's the nearshoring idea, right? Let's get into, though, a little bit further away from home, India and Europe, which haven't had it easy when it comes to trade negotiations. They're getting into a 14th round of trade negotiations, and you've sort of got this legacy of protectionism from India that's been a massive sticking point, particularly when it comes to agriculture. Agriculture, of course, we're talking vote banks. This all has to come into this issue. Will they actually be able to conclude a deal? Obviously there was certainly some sort of a trajectory set by Ursula von der Leyen and Prime Minister Narendra Modi to get this done by the end of the year. But there seemed to even be some doubt when it came up earlier this year in those conversations.
So again, Manisha, I think I would go back to the previous point here that the push to conclude the India-EU deal also, partially stems from the US tariff tensions, because there is, push from both sides to actually secure economic stability. Both sides want to strengthen supply chains. So the whole idea is that even, Europe wants to diversify away from Russia and China. That further underscores India's importance as a long-term trade and investment partner. So those are the different, very pressing geopolitical reasons. Those are creating urgency around conclusion of this India-EU agreement. But I think the larger concern for New Delhi in these negotiations is the imposition of carbon tax by the EU, because, it's impacting imports of steel, aluminium, cement, and the likes of these. And, just for your viewers, this is the tax imposed under the CBAM, the Carbon Border Adjustment Mechanism, and it really puts another barrier to India's exports. So I think what's really, sticking in this agreement is that India is asking for a balanced approach that recognizes development needs and shared responsibilities, because we don't want to disproportionately burden developing economies.
Absolutely. But Nikita, can I drill down a little bit more on what you're saying? I find this really interesting. Like I said, this was the 14th round. times have changed over the last year now that we see the Trump administration's position on tariffs. As you mentioned, it's this new sort of geopolitical environment, sort of a change in the perception of the kind of curve in political motivations. This has been talked about certainly over the weekend at the highest level in India. That's quite significant that has changed since previous trade negotiations. Has it changed enough to actually push discussions over the line, despite some of the setbacks that you talked about, the carbon tax, despite that having been a problem previously? Is the geopolitical concern enough to push this over the line, do you think? What's your assessment?
So, I think what Minister Jaishankar said over the weekend with respect to the US, that for a trade deal to get signed, India's red lines would have to be respected. I would say that, I would say the same thing for the India-EU discussions, that, well, the two sides will have to make some compromise and come at a common landing ground. But having said that, New Delhi's red lines will have to be respected. And I think the sticking points around opening up the agricultural market or slashing import duties on automobiles or the carbon tax, those are some of the very, very sensitive areas that we will have to reach an agreement on.
Just finally, Nikita, I mean, let's just broaden this out. As you've mentioned, there seems to be a key theme. Everyone is having to sort of rejig their position on trade. And in India's case, we've talked about the EU, we've talked about the Middle East. But where do you think, or what is it, the conversations you're having, where is it that India really needs to focus its energy? And I think it's really fascinating how these conversations with China have opened up so much more in recent months.
So, Manisha, I think, we need to understand that US was one of our largest trading partners. It's a big market for countries across the world. And when that market seems to be closing to our exporters, and when I say closing, it's because of higher tariffs, it's becoming increasingly inaccessible. We want to diversify and look at all the other options available out there and see what's the arrangement that works best for our exporters, because ultimately, whatever trade agreement is being signed, it needs to be signed keeping in view the national interests, at the center stage. So I think that's the approach Indian government is following. It's exploring markets in the Middle East. It's exploring trade agreements with the EU. And, later this month, there will be ASEAN summit. So the whole idea is to see what could be alternatives to diversifying some of the traffic, some of the export traffic that was bound towards the US, and how could we diversify it to some of the other countries so that there could be some level of cushioning that is provided to our exporters and especially small and medium enterprises.
Yeah, how do you see the import tariffs going, for example? You talk about this balance between the domestic agenda and the wider agenda, the global agenda, the trade agenda. The sticking points have often been issues like agriculture, for example, and the Indian government has often been, and it's a sort of a legacy of protectionism. How do you see that evolving? How much wiggle room does the government have vis-a-vis the current mood in the country about what they're willing, what voters are willing to accept, what the industry is willing to accept on some of the key issues?
So I think on agriculture, it has been a strict red line for New Delhi. And we also saw that in the Independence Day address when Prime Minister Narendra Modi, without naming any one country, actually said that, I remember he said he's standing like a wall against any adverse policy that could impact Indian farmers or Indian fisher folk or Indian cattle keepers. So I think that's a strict red line where India does not want to compromise. And that's also because this is a large, voting constituency of the country. But that holds true for other countries also. We saw yesterday there were reports that how farmers in the US are actually filing for bankruptcy because of all the tariff situation, and they are also a large voting constituency in the country. But on some of the products, some of the products might be able to cushion or absorb those tariffs, but all products will not be able to do that. And I think given the relatively less advanced technology adoption in our agriculture and dairy sectors, that will not be a sector that Indian government would like to open up to competition.
All right, Nikita Singla, thank you so much for joining us to break down the issue of trade, India, and those upcoming conversations from the Carnegie Endowment for International Peace. We're very grateful. We'll be right back here on Inside India. Stay with us. Live from the CNBC studio, this is Inside India. Warm welcome back. Now, AMD has reached a deal to provide chips to OpenAI over multiple years and through multiple generations of hardware. The way the deal is structured, OpenAI could end up with a 10% stake in the chip maker. AMD CEO Lisa Su and OpenAI's co-founder and CTO Greg Brockman spoke to CNBC about the partnership.
OpenAI deploys compute. That's a huge benefit to AMD in terms of the amount of revenue that we get from that. Every gigawatt of compute is significant double-digit billions of revenue to us. And as part of that, we have to work really closely together to make sure those deployments are super successful.
We need as much computing power as we can possibly get. And I think the whole industry right now is trying to really adapt to the amount of demand for AI services that we see coming over the next couple of years. And I think that when it comes to the suppliers of this computing power, I think that NVIDIA has something very special. We use them for training, we use them for inference. AMD, I think, also is really sort of delivering in terms of the next generation of chip that they've been working on.
That news overnight boosting chip stocks in Asia, but we've been watching the global bond market. Quite a bit of political fallout. Investors are facing an economic data blackout. It is due to the U.S. government shutdown, which is now entering its seventh day. U.S. 10-year yields at the 4.15 level. Over in Japan, meanwhile, the 30-year JGB yield hitting record highs in the previous session after Sanae Takaichi won the ruling Liberal Democratic Party's leadership race that happened over the weekend on Saturday. She's already being billed as the country's Iron Lady. Let's also check Indian bond yields, the 10-year at 6.5%. Now, veteran investor Paul Tudor-Jones sat down with our U.S. colleagues. He told us the biggest bubble markets are facing right now is in sovereign debt. Let's have a listen.
So I've consistently believed that the biggest bubble that we have is in sovereign debt. And a great question, one that I thought you would have asked me rather than that one, is why have we not had a blow up in the bond market? And of course, the reason for that is that now that we've embarked
This was the nicer cousin of that question, yes.
The reason for that is because with the easing cycle, you've brought in a whole bunch of flows attendant with that. We've taken asset managers, $500 billion overweight. So we've pulled forward all that demand in anticipation of this easing cycle, right? So we've pulled that forward. That's just one example. You've pulled in mutual fund and retail flows. So this easing cycle has delayed, but certainly not ended, what inevitably is going to be a huge problem with sovereign debt somewhere down the road.
What is the tipping point for that then? Because there has always been this view that the bond vigilantes would hold Washington in check.
Oh, I think they ultimately will. I mean, again, I think it's been delayed. I don't think just think about this year. You've had elections in India, Korea, Germany, this weekend in Japan. Every single one of those elections were for pro-growth candidates. Every single one of those countries are expanding their budget deficits. It is wild that we continue to go ahead, and I think probably England's the only place, because they actually have budget rules, where you're going to experiment with austerity. Every other place, we're going to grow our way out of the problem. And so I feel it's a bit like Star Trek. We're kind of boldly going where no man has ever gone before. And that's where I feel like we're doing in sovereign debt markets. And of course, when you're going to see it manifest itself, a problem is going to be at the end of this easing cycle, when all that demand has been pushed forward. If you look at the amount of debt that's going to be required to be financed next year, which is with the AI build-out, is going to even go up once you add the corporate line item on top of the sovereign line item. You're still looking at a huge increase in supply of debt, much larger than I think the market could handle in normal times. But again, we're in an easing cycle, so we continue to bring in these flows. And when that easing cycle ends a year from now, probably a year from now, it's going to be really interesting to see how the bond markets do at that point in time.
Very interesting stuff, Paul Tudor there. Coming up on the show, we're going to be live from the Global FinTech Festival. That's happening in Mumbai. And don't miss my conversation with the chief of payment solutions company Pine Labs, Amrish Rao. That's happening in just a few minutes. Stay with us. Live from CNBC studios. Welcome back. You're watching Inside India. Some of the stories we're keeping tabs on outside of India. France has found itself in a deepening political crisis. Prime Minister Sébastien Lecornu resigning alongside his government just 27 days after being appointed, and less than 24 hours after Lecornu formed his cabinet. Lecornu blamed the collapse of the government on the political party's inability to compromise, which is an issue that has plagued French politics for the last couple of years. Several parties are now urging President Emmanuel Macron to call a snap parliamentary election. Others calling for Macron to resign. Macron has tasked his outgoing PM with trying to achieve stability by Wednesday. Delegations from Israel and Hamas held their first day of indirect negotiations in Egypt on Monday. Egyptian and Qatari officials were intermediaries, shuttling back and forth between separate both sides as they work towards reaching a final agreement on a U.S. peace plan. Both sides have so far supported the overall principles of the plan, but some sticking points remain, including a permanent ceasefire and Israel's complete exit from Gaza. But President Trump is telling reporters overnight that he sees a, quote, really good chance of making a lasting deal. Those talks will resume this Tuesday, October 7th, which marks 2 years since the Hamas attack on Israel. And the U.S. government shutdown is about to hit the 1-week mark. That'll happen less than 30 minutes from now. This is after another vote on the Republican funding proposal failed in the Senate just hours ago. The White House is saying that there has been no shutdown-related layoffs yet, but warned it could come soon. U.S. President Trump also said they're making some progress to end the shutdown, but still insisting that Democrats must end the standoff first before he would be willing to make a deal on health care. National Economic Council Director Kevin Hassett told our U.S. colleagues overnight that President Trump may, quote, start taking sharp measures if the next funding bill fails. Here's a slice of that conversation.
The bottom line is right now we just want a clean, continuing resolution, and any government worker that loses their job because of rifts after another failed attempt to negotiate is going to be really there because the Democrats are being intransigent. And don't forget, Joe, that this is the third time since President Trump was in office that they've decided to shut the government down. So they've got Trump derangement syndrome. They don't really know how to govern when he's in the White House, and they're just flailing about. And this is really the worst of the three. They have absolutely no leverage whatsoever. One would expect that they would come, and they would come soon to the table, but they keep not doing it. You know, today the Senate opens its gavel, I think, around 3 o'clock. I expect there'll be a team of people in the Oval with the president hoping that we're going to get the government to stop being shut down. But if not, then I would guess that team in the Oval is going to start taking sharp measures.
When do you think GDP or the economy starts to be affected? Because it takes a while, doesn't it? What do you think? Is it a month? How long does it take?
You know, my friends over at the Council of Economic Advisors gave me a report at the end of the week that said that it costs the U.S. GDP about $15 billion a week for a shutdown, or about 0.1% of GDP. And so if the shutdown continues for a long time, then there are going to be a lot of things that don't happen, and it will show up in the GDP number. Now, the good news is that the economy is booming. We've got GDP now at 3.8%. We've got retail sales year over year up 6%. We got a capital spending boom. We've got deals like the ones that you've been talking about this morning happening left and right. And so there's a lot of good news out there. And I think the government shutdown in the end is just going to be a footnote in history. But the Democrats need to come to the table, get the government open, and then if they want to negotiate over something, they can.
That's Kevin Hassett, the director of the National Economic Council in the U.S. Now, let's check out some of the key assets, including oil and gold, and see how they're trading. Oil has been edging higher. The yellow metal, meanwhile, has touched another record, that high happening earlier in the session. Oil, it's pretty stable out there with oil prices, this after that OPEC Plus meeting over the weekend, and any hikes very much in line. In fact, perhaps a little bit less than investors were expecting. Let's have a look at crypto and the world's biggest crypto asset, Bitcoin, of course, hitting another record high, but now hovering at the 124,000 level. Bit of a flight to quality, a bit of a flight to safety, I would say. Not quality, safety, given that US shutdown. And we are continuing to count down to the market open in India. The Nifty will be looking to build on its Monday gains and hold on to that 25,000 level. This is how we're shaping up right now. So again, expectations to push higher at the open, but we very much flagged that 25,000 level and managed to breach it in the earlier session. Now, LG Electronics India is launching its $1.3 billion IPO today for retail investors with a price band set between 1,080 and 1,140 Indian rupees per share. The highly anticipated listing is structured as an offer for sales, with the South Korea parent company offloading a 15% stake. LG Electronics is seeking a valuation of about $8.7 billion for its Indian unit. The listing follows strong anchor demand from major global funds. They include BlackRock, Singapore's GIC, and also Norway's sovereign wealth fund. And as LG Electronics India kicks off what is one of the biggest listings of this year, another consumer-focused player is gearing up for the markets. It is the eyewear retailer Lenskart, which has just received the green light for its IPO. This marks a milestone as India's first eyewear-focused company set to go public. The firm's IPO filed in July, including fresh shares worth about $250 million. Proceeds will go toward expanding its retail network and upgrading its technology and cloud systems. Meanwhile, the IPO of non-banking financial firm Tata Capital has drawn a muted response on its opening day. Based on the NSE data, the issue was subscribed by 39% as of October 6th. With institutional investors leading the demand at 0.52 times oversubscribed. WeWork India, on the other hand, saw stronger momentum on the second day of bidding, with the issue subscribed by 13%, driven by robust retail and employee participation. The employee portion was 1.38 times subscribed. So we are counting down to the market open in Mumbai. We will be back in just a couple of minutes. Stay with us. Hello and welcome back. You're watching Inside India with me, Manisha Tank, broadcasting live from our Singapore studios. Now, there's lots of activity in the crypto space. Earlier in the show, we talked about Bitcoin breaching 125,000 overnight. It is now hovering at 124,000, with some analysts saying that some of this kick to the upside is coming from that ongoing shutdown, government shutdown in the US. Some investors preferring some safe haven options like gold and the world's most famous cryptocurrency, Bitcoin, of course. Now, this price has doubled in the last 12 months. Let's look at shares of Galaxy Digital, which is also pushing higher in the rally. CEO Michael Novogratz has been speaking to our US colleagues about why it might be crypto's time. Let's check it out.
Listen, we're in a bull market. And what happened over the weekend, we have a new Japanese prime minister, really dovish, much more dovish than the market expected. Every country keeps saying, well, we're going to get fiscally conservative later, right? The United States, we were supposed to have, right, Scott Bessent and Elon Musk were going to bend the curve on debt to GDP, and instead we're going the other direction.
Is that why you want to spend so much money all the time on democratic policies? Or is it's in your own vested interest? Is that why you're such a lefty?
That's it.
Because you're talking your own. That would make sense.
I just think the stories just keep getting fuel, and we're in a crypto bull market, and so
we've been talking about AI all morning, and a lot of the reason that I think we're in a crypto bull market is because we are in a bull market more broadly. I don't know if you agree with that or not, and I think the reason we're in a bull market more broadly is because we're in an AI bull market.
There's 100% correlation. Now, risk assets are going up because people have euphoria over this new technology.
Okay, and so then the broader question goes to maybe where Jim Cramer was just before. He thinks there's a lot of skepticism out there about what this all portends. And he's not wrong. I think there is skepticism. By the way, David Solomon, I think over the weekend made some comments in Italy where he said, look, there will be an equity drawdown at some point along the way when you get into these sort of bull, almost bubblicious markets. At some point, there is. I don't know if you think it looks like, 1999 or looks like something else.
Yeah, we debate all the time, is this 1998 or 1999? But
the idea that it's one of the two is telling.
Yes. Listen, every single long-term professional investor I know is nervous. They're nervous that they don't want to miss out on the last giant leg.
Right.
Remember, the NASDAQ went 44% from December 31.99 to whatever, March 20th. 44%. The biggest moves of these bubbles
come at the end.
Markets come at the end.
Right. But then the idea is, can you get on and off the train before it crashes? I mean, you're saying that's the game? I mean, that's quite a game.
Listen, great bubbles, right, happen around technologies that fundamentally change the world, right? The internet, our bubble was 99. We didn't even get Facebook and the iPhone for 5, 6, 7 years later. Right?
Oh, by the way, I'm a long-term bull, if you will, on the technology of AI. I think this is going to change our lives in so many ways. The question is there going to be a hiccup along the way? And it would almost be impossible to think it works.
Of course there is.
Unless you think that we've learned our lesson so much that because we're talking about it, we won't. And that's the thing I don't know.
No. The markets, we're going to get pulled in before the hiccup.
Okay, so when the hiccup happens, what does that actually do to crypto?
And listen, when the hiccup happens, all assets are going to go down, and crypto probably goes down with it.
Does it go down more? Is it more volatile?
I don't think so, because the response to that hiccup is probably going to be more liquidity. Right? The market gets addicted to liquidity, and so we have a president who is literally going to pick the most dovish Fed chair that we've had in our lifetimes. There's almost no doubt about that.
Who is that person, do you think?
My mind just
It's okay.
Hastert.
Hastert.
No, not Hastert. Hastert was the old
Kevin.
Hastert's the guy who went to jail, I think. or
Kevin Hassett.
Good. Kevin Hassett.
We're going to have Kevin Hassett on just a little bit.
Yeah, he's going to be their Fed chair, is my guess.
Okay.
And he's a dove.
Right.
And he's a president's guy. And so you pick him, and crypto's going higher.
Interesting stuff. That was Michael Novogratz speaking to our colleagues in the US. And interesting, we did have Hassett on the show earlier. Over in the US, the S&P 500 and the NASDAQ have closed at yet another record high overnight. Veteran investor Paul Tudor Jones has told CNBC the conditions are right for a powerful surge in stock prices before the bull market tops out. Have a listen.
If you just think about bull markets, right, the greatest price appreciation is always the 12 months preceding the top. So that's the nature of a bull market. It kind of doubles whatever the annual average is and before then. So if you don't play it, right, you're missing out on the juice. If you do play it, you have to have really happy feet, because there will be a really, really bad end to it. And my guess is that I think all the ingredients are in place for some kind of a blow-off. Will it happen? Again, history rhymes a lot, so I would think some version of it is going to happen again. Right. If anything now is so much more potentially explosive than 1999. 1999, we were looking at a rate hike in November. Now we're looking at a rate cut. We were looking at 4 more rate hikes before we actually topped in 2000. Now we're looking at 3 or 4 rate cuts, probably at least. So you have monetary policy that's going to take us to real rates of 0 or less, probably, depending upon the next Fed chair. And then the big difference is, obviously, fiscal policy. We had a budget surplus in 99, 2000. Now we've got a 6% budget deficit. So that combination, that fiscal monetary combination, is a brew that we haven't seen since, I guess, the post-war period, early 50s, something like that. And that was crazy times, right, coming out of the war.
Well, you think that most people who are watching us now, you need to be in this market now. But then the question, as I said, is you have to jump off the train before the train crashes. If you're suggesting the train is going to crash.
I'm not suggesting the train's going to crash. I'm suggesting that we're in a period that's conducive for massive price appreciation in a variety of assets. Will it happen or not? I don't know. There's, if you kind of just look, if you just think about the leverage that we had in 1999, you look at margin debt, and then you look at today margin debt, but you have to throw in leverage ETFs because people don't use margin like they did back then. We're probably a little more elevated than we were in October of 99. It will take a speculative frenzy for us to elevate those prices, right? It will take more retail buying. It'll take more recruitment from a variety of other, from long-short hedge funds, from real money, et cetera. It'll take a combination of those things. It's not going to go up without flows and without a story. The story's there. It's the combination of the most unique and aggressive fiscal and monetary conditions that we've ever seen.
Paul Tudor Jones there speaking to our colleagues in the US. Interesting what he was saying there about appreciation and speculation. One of the reasons markets have been pushing higher has been the exciting news about OpenAI and AMD overnight. But Indian markets are coming online. Let's check out the Nifty 50, very much in the green, but overall flat. Interestingly, holding above that 25,000 level, only just. We'll keep an eye on those numbers for you. But the Indian rupee, meanwhile, holding still pretty much flat. 88.73 at the moment against the US dollar. We'll keep an eye on those for you. Let's go now to the Global FinTech Festival. It is happening in Mumbai, and this year's theme is Empowering Finance for a Better World, powered by AI. Yes, that is the topic of the day, AI. The 3-day event will be headlined by Indian Prime Minister Narendra Modi and his British counterpart, Keir Starmer. It will also get attendance from the Indian Finance Minister, the RBI Governor, and the Chairman of India's market regulator, otherwise known as SEBI. Well, we have our own guest. We're going to check in with Amrish Rao, who is the CEO of payment solutions company Pine Labs, very much in attendance at that FinTech festival. He's joining us live from the festival now. He's in Mumbai. He has braved traffic to reach us. Thank you so much, Amrish, for joining us today. A very, very exciting time. First of all, I mean, just give us a flavor of the vibe. How are you doing?
Thank you very much. Thanks for getting me on your show. Look, fintech in India is doing extremely well. At this point of time, we believe that there are more banking transactions happening through fintech apps than all the banks put together. That doesn't happen anywhere else in the world. Over the last many years, the founders and the fintech enthusiasts have worked hard to create a buzzing ecosystem. And invariably, the Global FinTech Festival is where we all come together to celebrate what we've been doing over the last 12 months.
Yeah, you know what? I'm getting a sense of that buzz even from far away. And in terms of buzz, this week is a massive one for IPOs in India. We know that it's a very sensitive subject for you. Like, you cannot get into specifics. I know that already, Amrish. But your IPO has been approved by SEBI. That happened, I guess, mid-September, right? In terms of market conditions right now, how confident are you? It feels like a really bullish time.
Look, at the end of the day, we are fintech operators. We don't really think about markets. All we think about is our great products being created in this country. Right now, where we are with the support of the Indian government and also the enthusiasm of the Indian founder and the Indian employees right now, we think in India we are creating fintech products which are relevant not just in our country when it comes to solve for the underbanked, but also take this product stack global. So our focus is really about how can we expand what we are building in the Indian fintech ecosystem and take it global. That, you know, being a part of the committee here at the Global FinTech Festival, that's been our objective. Our objective is to attract talent from all over the world, bring in speakers from different parts of the world where everybody is exploring what's happening in fintech. And there is a lot happening in fintech around the world. May that be around data, around AI, or for that matter, even what's happening around in terms of stable coins. So we really want to bring in the best thought leaders to come into one single place.
Okay, but you know, I'm not going to let go this thing about the IPO, because this seems like a market in which valuations are pretty strong. How are you feeling in terms of your confidence around that issuance this year?
I really don't think that founders should be thinking too smart about what markets will do and where businesses will go. I think what we should be focused on is, are we building great products? And that's what I'm doing. You know, to straight answer your question, I come here as a part of the FinTech Festival out here, not so much as the CEO of Pine Labs.
Okay, well, I come here as an anchor on a business show, so I got to ask. Okay, but let's move on to some of the international markets. Sure. I'd love to know which ones you're most bullish on and what makes those geographies strategically important for you, especially when we're dealing with the world in which, you know, there are trade negotiations going on at the moment. You know, India is taking a very different position on the world, and I wonder how that might be boosting your business too.
I think there are many important trends which are happening around the world. First of all, real-time payments, and that's really making payments to each other using aliases or mobile phone numbers, is taking off all around the world. What that's going to do is it's going to make payment systems faster. I'll be able to send money to you instantly, but over a period of time, even businesses will be able to send money to each other with trust very, very quickly. And you have various other ways in which the same problem is being sorted for. Like, for example, in the US, there's this entire play around stable coins, which is nothing else but a surrogate currency out there. And using stable coins, what people want to do is they want to increase the velocity at which money moves from one individual to another. But in a completely different part of the world, may that be into Africa, the problems out there is, do you have a system, do you have a mechanism by which payment systems are available to those people who need it the most? Same goes for credit, and that's what is a very interesting play which is happening, wherein credit, payments, data coming together and changing lives. It has changed lives here in India, has had a material impact on individuals, and we can see the same happening in Africa, in Southeast Asia. And on the other end, US is solving for just faster payments.
Yeah, that's interesting, actually. You mentioned Southeast Asia. It's very clear that some of your key markets are actually all ASEAN nations. This is a company, I think you sort of, from a business perspective, you started some of your life, just from a nominal point of view, in Singapore. And I know that you interact a lot with the fintech community here, which has been very much trying to stand at the forefront of celebrating fintech as well, as much as you were doing at the festival in Mumbai. For those who don't know, just outline a little bit more about your business, because it's not just payments. We cannot just liken Pine Labs to, say, Paytm, because you are point of sale, BNPL, gift cards, all sorts of prepaid solutions. Can you just elaborate a little bit more on the model?
Look, we've actually filed with SEBI our DRHP. I think it'd be a little inappropriate for me to talk about all the goods of Pine Lab without talking about the risks of Pine Lab. So it's best that I avoid this question right now. But what I would just say is we do solve for problems associated with merchants, consumers, and just making payments easy between individuals and businesses for that to happen. And that's what we've been doing for many, many years. And we do believe that opportunity which we have gone after has been a significant opportunity in general.
You talked earlier about trust, and I think that goes hand in hand with regulation, making sure that there are safe spaces in which companies such as yours can operate, and also for consumers, regulation is really important. I wondered what your position was, particularly in India or the markets that you want to expand to, building that trust, having that, and making sure that there is that stable ecosystem. How much do you think about that?
Look, the only reason that payment systems around the world are slow because of lack of trust. If I trust you, it becomes extremely easy for me to send money to you. Invariably, payment system becomes slow is because somebody or the other is an intermediary out here who's trying to slow down just to ensure that the sender and the receiver is trusted parties out there. As trust gets built in, payment system will get faster.
Amrish, I'm so sorry. I'm going to have to jump in. It's all the traffic's fault, but enjoy the festival. It was great to have you on. That's it from us on Inside India. Stay with us.